What if I told you that massive upside potential isn't just found in high-priced tech giants, but in a hidden corner of the market, specifically in stocks trading for less than $5? Something strange is happening. Top analysts are slapping strong buy ratings on these deeply undervalued companies, hinting at an investing edge almost nobody's talking about. Stick around, because we're analyzing 9 such strong buy stocks that could be on the verge of a major breakout. Let's dive in. First up, at number 9 is DeFi Technologies Incorporated, ticker DEFT. Analysts see a whopping 152.94% upside, and 9 hedge funds are already on board. H.C. Wainwright analyst Kevin Deedy recently reiterated a buy rating with a $5.50 price target, and for good reason. DeFi Technologies is a dynamic player in the rapidly expanding decentralized finance space, offering investment services and a suite of products. The company has shown a promising rise in assets under management, climbing from $773 million to $947 million in just 1 month, with projections for continued growth fueled by broad crypto adoption. Recent Q2 2025 results saw adjusted revenue jump to $32.1 million from $25.3 million year over year, and a stunning turnaround in adjusted EBITDA to $21.6 million from a negative $2.5 million. With major institutional investors like Van Eck, J.P. Morgan, and Goldman Sachs holding shares, DeFi is riding a trillion-dollar wave, making it a compelling play for future forward portfolios. Next, at number 8, we have Eve Holding Incorporated, ticker EVEX. With an analyst upside of 86.10% and 11 hedge funds holding positions, Eve Holding is carving out a niche in the electric vertical takeoff and landing sector. Despite Canaccord analyst Austin Mueller slightly lowering his price target to $6.75 from $7, he maintains a buy rating, highlighting Eve's strong relationship with the Brazilian Development Bank and Embraer. Eve aims for 2027 ANAC certification and commercialization of its Eve 100 aircraft, backed by a solid liquidity position. The company is actively developing an urban air traffic management system alongside its EV tolls, creating an entire ecosystem. Their substantial pre-order backlog of approximately 2,800 aircraft, valued at nearly $14 billion, despite being non-binding, signals immense market interest and potential future revenue streams. While currently pre-revenue and navigating high R&D costs, Eve successfully completed its first full-scale eVTOL prototype assembly, with ground tests underway and flight tests projected for mid-2025. If you skip ahead, you'll miss the key numbers that separate hype from true opportunity. Coming in at number 7 is Sana Biotechnology Incorporated, ticker SANA. A clinical-stage biotech innovator with a staggering 151.40% analyst upside and 16 hedge fund holders. Citizens JMP analyst Rennie Benjamin recently reaffirmed a buy rating and a $5 price target. Sana is at the forefront of engineering cells as medicines, targeting therapeutic areas with massive unmet needs like diabetes, oncology, and autoimmune disorders. Their recent positive 6-month clinical results for hypoimmune-modified pancreatic islet cell therapy, UP421, for type 1 diabetes are truly groundbreaking. Published in the New England Journal of Medicine, this data demonstrates successful cell transplantation, function, and persistence without the need for immunosuppression, a monumental leap that could free patients from lifelong anti-rejection drugs. Financially, Sana reported a Q2 2025 EPS of negative 0.16, beating consensus, and bolstered its balance sheet by raising $105 million, extending its cash runway into the second half of 2026. At number 6, Atai Life Sciences, ticker ATAI, a clinical-stage biopharmaceutical company focused on transforming mental health treatment. With 140.70% analyst upside and 17 hedge funds invested, Atai is on the cusp of significant breakthroughs. H.C. Wainwright analyst Patrick Trucchio reiterated a buy rating and an ambitious $15 price target, driven by the promising outlook for BPL-003, a short-acting psychedelic therapy for treatment-resistant depression. Upcoming milestones, including an FDA meeting and Phase 2b and Phase 2 study results, are expected to pave the way for Phase 3 trials, potentially unlocking immense market potential. Atai's strategic acquisition of Beckley Psytech and its redomiciliation to the U.S. are are further streamlining operations and attracting investor interest. This positions BPL003 as a potential game-changer. Despite an EPS miss for Q2 2025, Atai's net loss improved significantly, and its cash position strengthened to $95.9 million, extending its operational runway into 2027. At number 5 is Mankind Corporation, ticker MNKD, a biopharmaceutical company specializing in endocrine and orphan lung diseases. With 118.98% analyst upside and 26 hedge fund holders, Mankind boasts a strong buy consensus. Analysts from Leerink Partners, RBC Capital, and Mizuho Securities all maintain buy ratings with price targets ranging from $7 to $10. Recent Q2 2025 results showed total revenues up 6% year-over-year to $76.5 million, driven by a 13% rise in Afrezza revenue and 22% growth in Tyvaso DPI royalties. A major strategic move was the acquisition of SC Pharmaceuticals for up to $360 million, adding FDA-approved Furoscix for fluid overload, a product with a projected $10+ billion US market opportunity, significantly diversifying revenue. This expansion is supported by a new non-dilutive financing agreement with Blackstone for up to $500 million, providing ample capital for growth. With a robust pipeline, strategic acquisitions, and strong financial backing, Mankind is positioned for continued growth in specialty therapeutics. The last analysis is what separates smart money from guesswork. Moving into number 4 is Relay Therapeutics Incorporated, ticker RLAY, a clinical-stage precision medicine company leveraging advanced computational and experimental technologies for drug discovery. With a massive 225.20% analyst upside and 27 hedge fund holders, RLAY is a high-conviction play. Leerink Partners analyst Andrew Behrens reiterated a buy with a $12 price target, while Raymond James maintains a strong buy. Relay's Q2 results showed OPEX down 16% quarter-over-quarter due to strategic cost-cutting, demonstrating financial discipline. They've extended their cash runway into 2029 with $656.8 million in cash. They're also exploring triplet combinations and initiated a Phase 1 trial for RLY-2608 in vascular malformations, expanding potential indications. Relay's Dynamo platform, integrating cutting-edge computational and experimental approaches, represents a unique competitive advantage in understanding protein structure and motion, fundamentally innovating drug discovery. Coming at number 3 is Bit Digital Incorporated, ticker BTBT, a holding company that has made a significant strategic pivot from traditional Bitcoin mining to a pure-play Ethereum treasury and staking platform. With 99.65% analyst upside and 27 hedge funds on board, Northland Securities analyst Michael Grandal maintains a buy rating with a $6 price target. Bit Digital's transformation is reaching approximately 121,252 ETH as of August 31, 2025, valued at over $532 million, with 86.6% actively staked to generate an annualized yield of about 2.94%. To fund this, they liquidated substantially all Bitcoin holdings post Q2 2025. Q2 2025 results showed total revenue down 11.7% year-over-year, largely due to sunsetting Bitcoin operations, but net income impressively jumped to $14.9 million, partly driven by a $27.2 million gain on digital assets and a 32.8% increase in cloud services revenue. Despite some revenue misses, the EPS beat expectations, and the stock saw a 10.58% increase on September 9, 2025, post-developments. Noble Capital Markets reiterated an outperform with a $5.50 price target. Stay with me, the next stock could change the game. At number 2 is Taysha Gene Therapies Incorporated, ticker TSHA, a clinical-stage biotechnology company focused on adeno-associated virus-based gene therapies for monogenic central nervous system diseases. With an incredible 166.67% analyst upside and 34 hedge fund holders, Piper Sandler analyst Byron Amin maintains a buy rating with a $9 price target. Taysha recently announced crucial regulatory alignment with the US FDA on the pivotal Part B trial design for TSHA-102, its lead gene therapy for Rett syndrome. This streamlined path could significantly accelerate its approval. Site activation for the pivotal Part B trial began in the second quarter of 2025, with patient enrollment anticipated in the fourth quarter of 2025. Financially, Taysha significantly strengthened its balance sheet in Q2 2025 through a $230 million public offering, extending its cash runway into 2028, a critical factor for a clinical-stage biotech. This financial boost, coupled with a sharpened focus on the TSHA-102 program, underscores a strong commitment to its lead candidate. And finally, at number 1, Nuvation Bio Incorporated, ticker NUVB. This biopharmaceutical company, dedicated to tackling gaps in oncology, boasts a 141.38% analyst upside and 36 hedge fund holders. Analysts from H.C. Wainwright, RBC Capital, and Wedbush all reiterate buy ratings with price targets ranging from $6 to $10. Preferred agent in the NCCN clinical practice guidelines, solidifying its market position. Financially, Nuvation Bio reported a net loss of $59.0 million for Q2 2025, but maintains a strong balance sheet with $607.7 million in cash and equivalents, further bolstered by $200 million in non-dilutive financing. Despite challenges like negative profitability margins and high price to sales, its robust liquidity and pipeline, including safusidenib and NUV-1511, position it for future growth. The stock has shown bullish momentum, marked by a recent Golden Cross event and a 73% surge over the past 6 months. Now, let's quickly glance at the numbers for these 9 compelling under $5 stocks. Looking at market caps, Mankind stands out as the heavyweight with a $2 billion valuation. Right behind it, both Nuvation Bio and Eve Holding come in at the $1 billion mark, showing strong investor confidence despite their early-stage numbers. On the smaller side, Relay Therapeutics sits at $710 million, while DeFi Technologies follows at $669 million. These are still mid-cap plays with room to expand. Now, revenue is where things really separate the group. Atai Life Sciences leads with $308 million, followed by Mankind with $286 million. Bit Digital is also pulling in a solid $108 million from its crypto operations. By contrast, names like Relay and Nuvation Bio are still very early, each generating just $8 to $10 million in sales, while companies like Sana Biotechnology and Eve Holding haven't yet reported meaningful revenue at all. Gross margins tell us how efficient these businesses really are. DeFi Technologies impresses with nearly 89%, while Taysha Gene Therapies isn't far behind at 85%. Mankind also shows strong operational efficiency at nearly 75%. On the other hand, Atai Life Sciences is struggling with negative margins at -5%, and Bit Digital is in the single digits at just 10%. Suggesting ongoing cost challenges. Finally, when we look at earnings per share, or EPS, Eve Holding shines as the most profitable with 63 cents, followed by Mankind at 11 cents. Both rare positives in a sea of negatives. Relay Therapeutics reports the steepest loss at -$1.95 per share, while Sana and Atai are also posting sizable deficits. So there you have it. 9 strong buy stocks under $5 that are challenging market assumptions and offering significant upside potential. Which of these under $5 stocks do you think has the greatest potential to be a 10x winner, and why? Drop your thoughts, insights, and predictions in the comments section below. And here are 7 undervalued tech stocks that could explode in 2025. Click here to watch.